Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting Asian Session Live Market Analysis webinar for this week. Today we are on 13th of October, Monday, between 5 and 5:30 GMT. I'll try to give the forecast for the entire week. So the derived forecast will be having the session-wise market moves, and also I'll give the derived levels in which the currencies are expected to trade. And also we will try to fine-tune the forecast using the market reading technique. I'll just briefly explain to you what could be the possible moves during this particular day. And also we always keep objectively the trading strategy. Whenever the position is taken, it will be making loss initially, and then we use the hedging order to limit the risk. And once the position starts making profit, we'll keep stop at the entry and remove the hedging order, and then trail the stop in profit-making position and maximize the profit. So with this concept, I will just try to do the forecast for the week. So this is the table showing the forecast for this particular week, 13th to 17th of October. It is the second week. The market is expected to make the trending move. So the trending move will always start with that of the week beginning false move, followed by that of the swing and rise moves or the swing and slide move. This time they are expected to make the swing and rise move in this week. So the week beginning false move is expected to happen, and we are seeing during that of the Japanese session they made a small dip and then formed up very quickly in the case of Euro and GBP. In all currencies, they started making up to 3:30 GMT, up to 3 GMT. They made all USD weakening move. Then slowly, they are reversing the market from now. After setting the highs and the lows, which are quite far off, more than 40 pips, that means the players wanted to be very active in this particular week. They would have seen a lot of positions carry forward to this week. That is why week beginning itself, they started making the wide range swings in the market. So they are expected to make the firm up during the Japanese session, followed by that European session, swing and slide, and US, it happens to be a holiday, and they are expected to make the swing and slide move in the case of Euro and GBP as the week beginning false move. Then immediately it will give that impression to that of the traders, we have to do sell and buy trade. So always they try to create the market sentiment and act against that of the traders. Last week you would have noticed that Monday and Tuesday, after that of Friday non-farm payroll the previous week, last week Monday and Tuesday they consistently gained the levels. And on Thursday I told you during the webinar that they are expected to make the slide because everybody is freely taking the buy position after the rise. So when all turn long, the players cannot continue to rise and give the profit to such traders. So instead, they made the drop on Friday, and those who had taken that long position would have just liquidated the long position and turned short in order to recover back the lost money. Then what happened? They made a small dip and firmed up. During the Japanese session, they are expected to make a firm up. Instead, they made the rise that showed that the carry forward positions were high from that of previous week. That is why they straight gained the levels and induced them to do the short covering. So after that of the short covering from 3 GMT onwards, they stopped cutting the new highs and or the initial highs, and then they started holding the market and slowly making the slide and making the USD gaining move. So you have to understand there is no point in just become emotional and try to support US dollar, or try to support Euro and GBP. And that sort of sentiment development does not give us any trading insight. Instead, we have to find out these are all the tradable instruments, the ratios, Euro, GBP are all the ratios. And these tradable ratios, whether we can do a buy and sell trade or a sell and buy trade, that's how we should be able to view it rather than having any sentimental attachment, and should not say that, no, I'm willing to take only buy in Euro and no sell. And there is no point in telling like this. So If you have a sentimental attachment to any currency pair, then invariably you find that you hesitate using a stop, also hesitate using a hedge order. And you have to understand the players are here to make wide range swings in a market. So you find almost about 70, 80 pips swing in the case of euro and GBP, about 100 pips in the case of Australian dollar. They made massive quick moves. And then after 3 GMT, they stopped cutting the new high. After 3:30 also, they are not breached. So they wanted to make the slide afterwards. So if you become bullish, then you won't feel like take a sell and buy trade. So then you need to understand that market is tradable. No emotional attachment or sentimental attachment to that of the market levels or to that of the currency pairs, the instruments. Then tomorrow, they are expected to make the swing and firm up during that of the Japanese, European, and US session. And there could be a dip during that of the European session. At the time, you can take a buy. And then later on, they are expected to make the rise. So again, Wednesday, you will find swing and rise during Japanese session, and then swing and slide during European session, and then swing and rise during that of the US session. Then on Thursday, they will be able to make the swing and rise. And this time you will find the rise will be an intentional move. So no upward spikes and things like that. They will only make a drop and then steadily gain the levels, steadily gain the levels. So again on Thursday, Friday, they will make the swing and rise move. Then probably everybody will realize that, okay, market has already reversed. What the corrections they have shown for non-farm payroll is being discounted, and then subsequently the market started making the opposite move because the traders strongly developed a bullish sentiment in US dollar. So the players are here to make the bearish moves in the case of US dollar so that they can easily trap the traders. So after making the bearish move on last Friday, the traders thought that there will be further drop and so started taking the sell positions during the gain, and then the players continue to gain the levels, so automatically their stops are filled, those who had taken their sell during pullback. And once the stops are filled, then they will think that, okay, it is not good to take sell and buy, probably we'll wait for the European session. Before that, they will try to make the slide from that of the gap time and start making the slide during that of the European and use some other data release as a sentiment and then make further downward move. So ultimately, you have to understand the players create the market sentiment and act against that of the traders once they commit the positions. So the traders committing the position is important. The analyst giving a bearish or a bullish call is not important. The traders have to commit. Once the traders commit the position following the market sentiment created by that of the analyst, then the players are here to trap the traders. So this is the game plan. So in that, they are expected to make the week beginning false move followed by that of the gaining moves in the case of Euro and GBP. And also in the case of USD and USD CHF, as I explained the forecast for this till end of the year, they will gain the levels in the case of Euro and GBP, and also USD and USD CHF, and also in the case of USD CAD and Australian dollar will be showing the wide range swings from that of 86.50 to 88.50 levels. The next week, that will be the third week of the month of October, and they are expected to make the upward trending move. The swing and rise move may be seen again after the week beginning false move on the next Monday. With regard to the levels, you find in the same range they are going to make the moves. Why should they do that? So what they had done it, they accumulated on the Friday during which the non-farm payroll was released, that is on 3rd of October, and then subsequently they just gained the levels on 6th and 7th and also part of 8th last week. And once they come almost close to that of 1.28, they reversed the market back on Friday. And now you find that they are closer to that of the low. So they will make further downward move and create the feel that, okay, the market has come back to that of the earlier low. People will think that it's going to be a support. Once they breach it briefly, immediately the support turns resistance. So everybody will start selling. Then immediately the players will absorb all the sells and take up the market in a very quick way and trap the traders. So here it is nothing but the trap game. We keep the bait for the fish, or we keep the bait for the rat if you want to catch them. And similarly, for traders, the players keep the bait. That is nothing but the bait is nothing but the supports and the resistance. So once the supports and resistance turn opposite, immediately everybody thinks that, okay, that is true. And immediately they go and grab the food, but they fail to understand there is a trap behind. So the traders continue to suffer. So the players think that they are human and the traders are similar to animals, showing the herd mentality and trying to get trapped again and again so foolishly. And there are experiments conducted with that of the rats, the placebo experiments, that whenever they give the trap for several occasions and subsequently in generation, you find such rats, they sense the trap and avoid taking the food. But in the case of human, it is unfortunate. Even though several years pass, still the same type of trap is being used by the other players, and the traders continue to lose the money and become victim for such act. Then in the case of USD yen, from that of 107.50, they just made further downward move to 107.06 to create the US dollar sentiment. And then subsequently, again opposite to that of the US dollar sentiment, and with which euro and GBP gained the levels. And now you find that the yen, they stopped cutting the low and started gaining it. So they will be holding USD yen briefly when euro and GBP are making corrections, so that they will be able to make drop in the case of euro and GBP during the week beginning, and then subsequently they will gain the levels in the case of US dollar, and people will think that euro and GBP are going to drop, but they will gain the levels in the case of euro and GBP later on from tomorrow. So this is what they do every time. So we need to follow that and see that we are able to capture the profit rather than become afraid of the market again and again. Then in the case of USD CHF, 0.9520 to 0.9850, they are expected to gain. And you find they're doing the consolidation to gain levels. And in the case of Canadian dollar, when Aussie is making such a big swing of 200 pips, they are not done that. And they are expected to gain further upward in the case of USD CAD. And from there, they will make a drop again, make upward stop and then make a downward move and make a downward stop and make an upward move. So that is how the wide range swings they are expected to make in the case of USD CAD, wherein every time they will show the new high and then they will show the low after making a drop. This way, they will try to make the wide range swings in the case of Canadian dollar, as long as Australian dollar is also making the wide range swings near that of the low. And they will accumulate more huge Aussie positions around 0.86 and 0 probably during that of the stop-ins to that of 0.8615, and then they will try to accumulate the position. Later on, you will find after the year end, they will start gaining the levels in the case of Aussie also, above that of 0.89. So till such time, only euro and GBP are expected to gain the levels. USD yen and CHF are also expected to gain the levels, and Canadian dollar and Australian dollar is expected to make the wide range swings during that time. So whenever they make a drop in the case of euro and GBP next time, today, below that of the low, try to watch and see that the new low is not being breached for 30 minutes to 2 hours, and try to take the buy positions rather than trying to buy after the rise. Now, these are all the initial lows and the highs. They are set around 3:30 GMT. By 3 GMT itself, they set the initial lows and the highs today aggressively, and then they stopped cutting the highs. So 1.2697 still they are not breached, but they are holding closer to the high, and they are expected to make the slide. Then in the case of GBP also 61.26 they formed the high, and they are not cut the high. Then USD yen 107.06 they formed the low, and then slowly they are gaining the levels. And CHF 95.20 they formed the low, and slowly they are gaining. And Canadian dollar, they are not breached the low or the high, but the range is very narrow. And Australian dollar, this is the only currency showing narrow range, and all other currencies they are made about 70 to 100 pips spread all along. So that shows that the players found a lot of traders carry forward the positions. The Australian dollar 86.52 is the low, 87.50 is the high. They are not breached the high or the low. Almost 100 pips they are done it as a big swing during the start of the week. And slowly they will just make further drop and accumulate positions around 0.86, when those who have taken the long position after the rise will come for a liquidation of the long position, and then later on they will make the slow gaining moves. So if you understand that they make the intentional move slowly and the extended move quickly, then you will be able to understand the contra trades are to be done when they are making quick moves, and the intentional trade has to be done whenever they are making slow moves, following the intentions as a trending. So that way, we'll be able to easily get money from the other market without getting tracked. Simply looking into the other parameters, it may misguide us because the players make the moves in such a way that the traders get confused. That is why we find invariably the analysts continue to use various types of statistics and combining them. And in statistics, there is no such mechanism as a same data has to be calculated using different type of statistics. Now, I can ask anybody who has learned statistics whether the same data can be used to apply various types of statistical methods to find the conclusion, because invariably the variables are important, and based on the type of variables and what is the outcome you like to have, you have to apply the statistics. And unfortunately, what happened in the name of statistics, only the chart study is being done, and in the chart study some use the blank charts and simply give the visual importance to that of the candles, and certain others they try to apply that of the Elliott's wave and the Fibonacci retracements, etc. And those things will work based on the herd mentality study. That is called as the optimality study. And those optimality study will be there, will be nice, provided there is no manipulation in the market. And if there is a manipulation, then you find that such statistics try to deviate from that of the market, and immediately we start explaining or accept the move, telling some excuses from fundamentals. And once you give the fundamental excuses, and suddenly if the market reverses, you simply say that, okay, it is a statistical excuse. So we try to live with it of the excuses from time to time. And then we simply pardon the market, lose money. Then this is the trading strategy. We follow that we note down the initial lows and the highs around 3:30 GMT, and then try to decide whether we will be able to do the sell and buy trade or a buy and sell trade. And if the high has been formed and not breached the high for more than 30 minutes after the formation, after 3:30, then we'll try to take the sell position near that of the high, and then try to book profit near that of the low or by end of the session. Then session-wise trade, we try to do it. And today, they are expected to firm up during the Japanese session. That is what they have done it. And European and US session, they are expected to make the slide. So the best thing is watch whether they are able to go closer to the high during late Japanese session, or making a brief upward stop and during the gap time and start of the European session. Then take the sell position. You will be able to see that they give you a nice profit during the slide. And afterwards turn long in the case of Euro and GBP, and also USDN and USD near the low, and then try to maximize the profit. It will appear that the market is making the USD gaining and USD weakening move. Now you find that the contrarian move already they have started. Aussie is showing positive net change. USD CAD is showing positive net change. This is how they handle the crosses. So you have to understand that. So in a loss making position, we use the hedge order to limit the risk 30 pips away from the market. And if the position start making profit of 25 pips and above, we keep stop at entry and remove the hedge order so that there is no risk involved in the trade. Later on, we trail the stop and also keep 45 to 75 pips limit as the exit order or take profit order. And then once the market comes in our favor, you trail the hedging or you trail the stop and also move away the take profit order in order to maximize the profit. So we minimize the risk and reduce the risk to nil and maximize the profit. That is our simple trading strategy. I think everybody is working for it, but unfortunately, people think that the method needs to be very complicated. Only then the people will think that it has got a value. But you know that always simplicity is rewarded by the market. Simply, the market rewards patience rather than the impulsive analysis or emotional talk, etc. These are all the timings of the market. So for another 1 week, we will follow this timing. And later on, from that of 26th October, you find the daylight saving system will be switched off. That is Sunday, 26th, in Europe and UK. And afterwards, from 27th, we will follow a slightly varied market timings. The European session will start by 8 GMT, and US will be still continuing still that of the November 2nd. So from till 3rd of November, you will find that US session continue to trade from 13:30 onwards. So what will happen is that the European session will be shortened by 30 minutes. And later on, from the 3rd of November, you will find European session will also be shifted 1 hour and starts by 14:30 GMT. Then you will find that European session will gain by 30 pips. So I'll give those market timings when the appropriate time comes. This system will be using the timings followed by the other players as this. So I'll come back by Thursday and try to give the review of the forecast, what I have given it. And if there are questions, I'll answer to those questions here. You can put it in the chat window or the question answer window. I'll read and give the answer. Monal has got a question. The move that we saw on Thursday, Friday was to trap traders like GBP, USD, and it is long liquidation. And USD should we then expect the yen crosses to gain? Yes, yen and yen crosses are expected to gain. So what they will do now is hold USD yen, between 107 to 107.50 and drop Euro and GBP. What will happen? Then the yen crosses will make one quick downward move, like 135 to 134, like that. So they will make one quick drop in the case of Euro yen and GBP yen as a contrarian move. At that time, we will find Euro, GBP, and USD yen showing negative net change. And USD yen will be showing nominal negative net change. But Euro and GBP will show big negative net change. And as a result, you'll find Euro yen and GBP yen will come down, and also Australian dollar yen. Then afterwards, they will accumulate all the buy positions there. And from tomorrow onwards, they will start gaining the levels in the case of USD to start with by telling some story. And later on, they will gain the levels in the case of Euro and GBP as well. And then you'll find an upward contrarian move. At the time, Euro yen and GBP yen will make very good rise. Then which yen crosses do you recommend? Euro yen, both Euro yen and GBP yen both will gain. And you know that whenever they wanted to create the sentiment, they use GBP. Because GBP is a currency which can be easily used to create the market sentiment. That is why they will move that first. So today, during the drop, GBP will be the first one to make a drop. And I told you many times that whichever is making the lesser positive net change will be the first one to make downward move. You can recognize it. And whatever the concept I tell you, I think we're not taking it seriously. That is why the questions are asked again and again. And invariably, what happens? We don't really understand the players fully. This probably, since it is given free here, you don't find the value in it. Okay, Grivel. Next change of the trend, that is USD strength, is expected to by January. No. Till February 2015, they are expected to make the USD weakening move. And afterwards, there will be a massive USD gaining move happening in the market. And they have to make alternatively USD gaining and the USD weakening, telling some stories from time to time. So once the traders think that, okay, that is going to be the order of the day, all Euro and GBP will continuously rise and freely every drop start taking the buy positions, then the players will induce them to make buy position after the drop and continue to drop and trap them. Then everybody will say that, okay, USD gaining move because the supports are all turning into resistance. So they will find which is the last support, which is trying to support the market. And finally, when there will be a confusion because extreme downward moves could be envisaged, and later on when the market reverses, okay, then everybody will say that apparently this is the support. And later on the market start going up. Then the traders will think that, okay, it's only a bouncing effect, then try to take sell position and book some profit. The next time when they sell, the market continue to rise and trap the traders. So it is unwise to do sell and buy trade after the drop, and similarly buy and sell trade after the rise. Use your common logistics, then you will find how easily the players are giving profit for you. And if somebody use the common logistics and try to trade, people say that you do not know how to read the market. And you need to read the market only using technicals. And if you don't talk in terms of technical terms, then they ridicule upon you. They feel as if you are uneducated. But later on, they find that they are losing money. The so-called uneducated consistently make profit from that other market. That's why I used to tell most of the fund managers that those who are sitting in that of the deal room and other places, they don't find what the reaction of the traders outside, and invariably they become corporate idiots. Any other question? So that I'll answer to those questions. Okay, no more questions. Then I'll try to show the expected market moves for this week. So this being recorded, so you can refer to this webinar again if you need to see the expected market moves, or you can take a screenshot and refer it, and also the levels I have shown it. And still they have not breached the lows or the highs what they have set. So that indicates that they wanted to make the slide today as a week beginning false move. So I take this opportunity to thank FX Street for the facilities provided to present the webinars and you people for your interest and wanted to learn about the market and try to learn it objectively and try to see that you are not trapped again and again. And then you'll be able to see that you are getting the real reward from that other market. So thank you one and all. Wish you all very happy trading. I'll come back on 16th Thursday and try to review the forecast, what I have given it. Thank you one and all. See you on Thursday.